The NSC again very much under pressure, in the red, losing about 24 points. And many people are saying, you know, all factors withstanding inflation, the currency, exogenous international forces, now investors want to see what the half-year results, particularly of the banks, are going to look like.
That's right, Lerato. Now the interest is beginning to shift onto the first half of the annual reports. That is the performance for the first half of the year. Sorry. Now we've seen that come through with housing finance today. We've seen them actually be able to sustain the Q1 growth. So it's looking very positive, and we hope that this momentum is going to continue. So we really are looking out for the rest of the banks. Housing finance is a bit of a niche player purely in the market space. So we hope that this kind of growth will actually be sustained by the rest in the financial sector.
I mean, we'll talk about housing finance in just a second. What are your expectations by way of bank results? I mean, as I said yesterday, the results for 2010 full year were stellar. I mean, growth rates on average 30-40%. We're seeing some pressure for equity, which is a blue chip counter, but one of those banks that really give you an indication of what kind of momentum exists in the sector. The Standard Group, although a service industry company, the fact remains, you know, things are not looking pretty at the moment.
Well, for Standard Group, things are not particularly rosy at the moment. The concern is that they have some financial difficulties because historically it's not been very robust financially. But with declines in terms of advertising revenue coming through, particularly from the newsprint end of things, things don't look very positive for Standard Group. However, looking forward, we are in a kind of an election year. And generally what happens is that the mass market is very, very excited by political news and intrigues. So we really hope that that kind of news will again put Standard Group back into the positive in terms of growth.
All right, let's talk about housing finance. I mean, a growth up 67%. You did say, you know, they're a niche player within the banking space. They're very much a mortgage financier. How much demand is there for this kind of service?
It is absolutely great and overwhelming demand for the mortgage space. Remember, Kenya's demography is that the bulk of it is towards the youth. So a lot of it is between 25 and 35 years of age. These are first-time house buyers. So the demand for mortgages is absolutely growing. The housing prices are through the roof. So the opportunity for housing finance and mortgage players is absolutely enormous. A few months ago, we had KCB get some kind of a financing agreement from other players to not only come in and bolster the Kenyan mortgage space, but actually the East African space. So we see that the housing sector is, and actually real estate as a whole has been a huge growth market, and housing finance is very, very well placed to actually capture a lot of gains in that space.
All right, just hold that thought, Kimathi. We were earlier on at a briefing for housing finance when they released results that they'd posted growth pre-tax profits of 67%. Let's take a look at their views.
Yeah, no, thanks a lot. And yes, the area around demand, and especially for affordable housing in Kenya, has been there. There's been a lot of active activity, especially among developers over the last 4 years. As a strategy, we have focused on the middle income and lower middle income of the market, and ensuring that we are coming up with many products to really help enable rent payers to be able to convert into homeowners.
All right, now earlier on, Alicia Seckham, she spoke with the Managing Director, Frank Ireri, and she wanted to find out to what extent that they're having to take a low base effect into account in order to launch a fixed interest rate mortgage product that's designed to attract some of these first-time home owners. This is what he had to say.
The fixed interest product that we hope to launch next week is actually on the back of the 7-year bond money that we raised in the market here in the fourth quarter of last year. So on the back of that 7-year fixed, we're able now to offer a 5-year fixed. And basically, it is targeting first-time homeowners who naturally are cautious about the possibility of their monthly mortgage repayments going up and down as the variable interest rates oscillate in the market. we're giving them that peace of mind that for 5 years, whatever mortgage repayment amount is set up, that is what they can budget for and will be paying over the next 5 years.
Well, Kimathi, those were the views of the CEO of Housing Finance, already coming up with innovative products to attract the first-time home owner. We do know that one of the biggest challenges in Kenya in general is that bank credit to the mortgage sector is very, very low. Effectively, mortgage financiers bear a lot of the weight for construction and real estate projects. How much of a risky business lies ahead for Housing Finance?
Well, the risk indeed is there, and the reason why banks generally are not particularly keen on these long-term products such as mortgages is because they essentially deal with short-term financing. So in their books there would be quite a mismatch in terms of the exposure if they were to really delve into mortgage products. That aside, the opportunity really is there. However, for the mortgages, one of the unfortunate things is that our reference bureau in terms of credit reference bureaus are only now beginning to come up and be established. So credit history is hard to come by, unlike many other developed markets. And that therein lies the actual risk.
Right.
And also, as going forward, a lot of interest has historically been in the mid and higher end of the retail space. So with shifts increasingly focused towards the lower end of the market, then we naturally expect that this kind of risk will actually not only increase but actually be many times magnified when the lower end of the market becomes the focus.
Other results coming through, Kimathi, finally Olympia and their balance sheet looking a lot better than what it's done in the past. Just your views on this particular company, the fundamentals, are they strong going forward?
Well, with Olympia Capital, lots of questions really arise. We are in July, the year ended in February. 5 months really is more of a historical statement than a favorable picture of the company's operations. But that aside, we saw quite some increase, over 90% in terms of profit from operations. That is what was reported by the company in its profit and loss statement. However, looking at it from a cash flow perspective, we've seen actually a dip from the cash flows in terms of operations. So lots of questions for this particular company. And going forward, one of the things that they're doing is that they're actually getting out of their interest in Cape Town for about 7 million rand. So we hope that now they will be able to focus in terms of the Kenyan and East African region, where they are much more comfortable in operating. Last year, the CEO actually put out a statement that their operations in Southern Africa were not doing particularly well, and it was actually their fault in terms of not really understanding the market dynamics there. So we hope that moving forward, this company will be able to restructure itself, focus on the markets where they really understand the dynamics of the marketplace, and hopefully deliver much more vibrant results, and in time, as other companies are doing.